The Federal Reserve expected to hold rates steady this week, even as President Trump turned up the pressure on Jerome Powell while touring the Federal Reserve this week, calling for aggressive rate cuts. Here's Trump's reaction Friday.
We had a very good meeting on interest rates, and he said to me, now I don't know if he's going to say this on Thursday or when they ever speak, but he said to me very strongly, the country is doing well. He said, congratulations. I think he's going to start recommending lower rates.
Joining me now, World Bank Group former president and former Treasury Undersecretary David Malpass. David, great to have you on the show. Good to see you again.
Hi, Jack. Good to see you.
So I want to ask you about the Fed as an institution, but let's start with the latest news. So the market does not affect the Federal Reserve to lower rates when it meets next week, but you believe that the Fed should cut. Why is that?
Here's why they should cut. The economy is doing well and money is coming in, and the inflation numbers actually are overstated right now. One of the key examples of that is in housing. It's a heavily weighted part of the index, and the Fed is thinking that housing and rents are going up. They've got a 4% year-over-year gain. Around the country, a lot of people don't feel that. So I think there's room to cut, and the money will flow into production. President Trump has been really clear about what the economic plan is. That's to produce more energy, more manufacturing. That's going to bring prices down. So as you think about it, you need lower interest rates in order to fuel small businesses and the supply chain.
That owner equivalent rent that can sometimes keep rates up, that is a funny, a strange reading that we've talked about before. I want to ask you about that. You just made a point about small businesses, and I think that's really important. So you've been making the case that it is short-term rates that affect small businesses. But it's worth keeping in mind that the Fed doesn't control those long-term rates. That's where mortgages are based on, and it's tough for the Fed to do anything about that. So sort of parse that for us. Could long rates actually go up if short rates were to come down?
I hope not. If they communicate it properly, you can get both of them to go down. That's because the U.S. is an attractive economy for investment. So if you think about who's going to be buying the bonds and bills in the U.S., they should buy both of them, Treasury bills and Treasury bonds. That gives you lower yields both ways. The way you can do that is show how productive you are. The regulatory reforms count. The changes in the trading system are making the U.S. stronger. And so the dollar should reflect that. It should we should be able to have interest rates 1% or even more below where they are right now and still have the dollar be stable and a good currency for people to invest in.
Okay, so someone else, as we all know, has been making the case for lower rates, and occasionally in more strident terms than you just did, President Trump. The president has also threatened to fire Jay Powell. And all of this has raised this issue of Fed independence. If you look around the world, nations with independent central banks, they've got stronger currency, they've got lower inflation. Do the president's words threaten the independent Fed?
The data you just said, that around the world independence gives you lower rates, I think it has to be challenged. What gives you lower rates is successful economies. So I think what you're talking about with independence, that's a legal question, but there are powerful norms that protect the Federal Reserve and the chairman, and the goals should be aligned across the economy with the administration, with the Fed, for a good, healthy, strong economy. I think there can be better coordination right now. So it's not so much an issue of independence, it's an issue of making the right decisions on how to defend the dollar, how to be a successful economy. We're on the right track, and the Fed's not recognizing that right now.
I've got too little time for two questions, so I'll give you your choice, David. You just said defend the dollar. We can talk about the falling dollar. Does that worry you? Or you've made comments about regime change necessary at the Fed. Take one of those, and then we'll have to leave it there.
The dollar was super strong at the beginning of the year, so I don't think it's really weakening very much. So we're okay there. And we need much more than regime change. We really need to redo and remake the models of the Fed. So it's beyond personnel. It's the actual way the Fed decides on interest rates. They've been making too many mistakes. That needs to be redone.
All right. Well, we will see this play out over a long period of time. David Malpass, I hope to get your views again soon. Thanks very much for coming on the show.